In this discussion, we will discuss the discussion question of define encumbrance and how it is used. When we see a discussion question or essay question like this, our goal typically is to expand on the discussion or essay question answer if time allows, that making it more likely that we're going to pick up on the information that's being looked for to give points with regards to an essay question and be able to add new information to a discussion for a discussion question. Keeping that in mind, let's look at this one more time. Define encumbrance and how it is used. When we see something like this, basically our first instinct would probably be to take the encumbrance term, define it, and then get into basically how it's going to be used, possibly giving examples. That would be a good place to go, a good place to start. If we're looking for more information to add after that or for a discussion question, then of course we could take a step back. We can always think about, well, what is the encumbrance used for? It's a tool for something. What's its purpose? Well, it's going to be part of the accounting system. What type of accounting system? Is it going to be part of a governmental type of accounting system? Typically, it's going to be a part of, as compared to a for-profit type of accounting system. Not in a for-profit, is in governmental. What's the difference between the two? And that could lead you into, of course, a discussion between governmental accounting versus for-profit type of accounting. So if we think about the encumbrance then, the concept behind encumbrances or the use of encumbrances, it's going to be a procedure that's going to earmark a portion of the remaining budgetary appropriations when a purchase order is issued or a contract for the service is signed. So, and this is going to be the idea. The best way to think about this is to actually go through a series of transactions, what would normally happen in terms of recording types of encumbrances. So when we think about encumbrances, we're basically looking at three components. So we have the budgetary activities, and then we have the purchase order kind of time that the purchase order or estimate type happens. And then we got the normal time period where we would think about under an accrual basis, or in this case, modified accrual, when the expenditure actually kind of takes place. And our goal here is, of course, accountability with governmental accounting. So we want to basically assign and make it known where the funds that we have are going to be assigned out as soon as possible. We want to say, okay, we know basically what we're going to do here. We're not going to wait until we have a normal expense that would be recognized and reported as we would with financial accounting, waiting until some triggering factor for the expense to be recorded, the expense to have been incurred in order to report it a financial transaction. We want to report it before that and say, hey, look, we're planning on doing this so that everybody kind of knows beforehand. The way we do that is we first actually post the budget. So the budget is going to be called appropriations. So we actually put the appropriations and say, hey, this is what we plan to spend already. We've got it budgeted out, and we're actually going to post the budget into the general ledger. And then we're going to say that when something happens that basically is going to assign those appropriations out, something like an estimate that has been approved or a purchase order has been approved, then although a financial transaction still hasn't happened yet, we're now saying that we're basically, earmarking those encumbrances that are in there, and we're assigning them to a very specific purchase order now, because now we've made the estimate. Remember that when you think of a purchase order, it's not a financial transaction, because you can think of it as for normal type of accounting for a for-profit. We sent out a purchase order, we didn't get any inventory, and we haven't yet paid for anything. So it wouldn't be on the books for a financial transaction. But here again, we want to say, hey, look, there's the appropriations. We've made a further commitment with the purchase order now that's been approved and been assigned out. So you don't want to over-assign or send another purchase order related to this. It's already been sent out, although we haven't got anything yet. And then at some point in time, we're going to get whatever we sent the purchase order for, at which point that would be the normal point in time that under an accrual basis, we would actually record the transaction. Something happened. We got the inventory or the supplies, and then we would record the supplies at that point in time, either as an expenditure or as an asset of supplies, depending on whatever method we are using. So there's kind of three components, three time periods that we have that are happening here. So the encumbrance then is going to be that time period where we're saying, hey, here's the budgetary amount, the appropriations. We haven't yet incurred it for the expense, but we're saying that it's on the way. We've committed to an estimate for it. It's going to be recorded with a debit to encumbrances, a credit to encumbrances outstanding. And then when we have when we get the actual expenditure to be recorded, because we've received whatever we purchased with the purchase order or the contract, and have the normal reporting, which is what we would think of as closer to normal accrual accounting, the triggering event has happened under normal type of financial reporting, then we have to reverse the encumbrance because it's just a holding account. So it's kind of like recording the expense before we're allowed to record the expense under normal type of accrual accounting, just so we can show it and be kind of more transparent. Therefore, we're going to have to reverse it exactly at the point in time when the actual expense is allowed to be recorded. So then we reverse the encumbrance and then record the actual expense at that point in time, or expenditure, not expense, but the expense-like account expenditures.